Look, I'm not going to sugarcoat this. What's happening in the silver market right now is something most people won't see coming until it's too late. And by the time the mainstream catches on, the opportunity will be gone. So if you've been sitting on the fence about silver, or if you think you have all the time in the world to make a decision, I need you to pay very close attention to what I'm about to share with you. Because the data I'm looking at right now tells a story that should concern every single person who cares about protecting their wealth. And it's not just about silver going up in price. It's about a fundamental shift in the global financial system that's already underway, whether you're aware of it or not. Let me start with something that should immediately grab your attention. Silver just hit record highs, breaking through levels we haven't seen in decades. But here's what's really interesting. This isn't just a speculative bubble. This isn't retail investors piling in because they saw something on social media. This is being driven by something far more powerful and far more permanent. For 5 consecutive years, the silver market has been in a supply deficit. Think about what that means for a second. 5 years. That's not a temporary imbalance. That's not a short-term disruption. That's a structural problem that's getting worse, not better. Over those 5 years, the cumulative deficit has reached 820 million ounces. Let me put that in perspective for you. That's nearly an entire year's worth of global silver production that simply doesn't exist anymore. Now you might be thinking, okay, supply deficits happen, markets adjust, prices go up, more supply comes online, and everything balances out. But here's where silver is different from almost every other commodity on the planet. The supply response isn't coming. And there's a very specific reason why. Silver isn't primarily mined for silver. About 70% of silver production comes as a byproduct of mining other metals like copper, lead, and zinc. So even if silver prices double or triple, mining companies can't just flip a switch and produce more silver. They're mining for the primary metal. Silver is just what comes along for the ride. This means the supply side is essentially inelastic. It doesn't respond to price signals the way other commodities do. But the demand side, that's a completely different story. And this is where things get really interesting, because the demand for silver is coming from places that aren't going away. In fact, it's accelerating. Let's talk about industrial demand first, because this is the foundation of everything happening in silver right now. Silver has the highest electrical conductivity of any metal. It has the highest thermal conductivity. It's the most reflective. And it's essential for technologies that are defining the future of our economy. Solar panels. Every single solar panel requires silver. And we're not talking about a tiny amount. The average solar panel uses about 20 grams of silver. Now multiply that by the explosive growth in solar installations happening globally. Countries around the world have committed to massive renewable energy transitions. China alone is installing solar capacity at a pace that would have seemed impossible just a few years ago. The United States, Europe, India, they're all racing to build out solar infrastructure. And here's the kicker. As solar technology improves and becomes more efficient, it doesn't use less silver. In many cases, it uses more. The newer, more efficient panels require more silver to achieve those efficiency gains. So we're looking at a demand driver that's not just growing, it's compounding. Then there's electric vehicles. Every EV uses significantly more silver than a traditional combustion engine vehicle. We're talking about silver in the electrical systems, in the charging infrastructure, in the battery management systems, and the global push toward electrification isn't slowing down. It's accelerating. Major automakers have committed to going fully electric within the next decade. Countries are setting deadlines for phasing out combustion engines. This isn't speculation about what might happen. This is policy that's already been enacted. But wait, there's more. And this is where it gets really wild. Artificial intelligence, the AI boom that everyone's talking about, that requires massive data centers. And those data centers require enormous amounts of silver. Every server, every circuit board, every connection point in these facilities uses silver because of its superior conductivity. As AI continues to expand and more companies build out their AI infrastructure, the demand for silver from this sector alone is going to be staggering. So you've got solar, EVs, and AI all creating structural long-term demand that isn't going away. But that's just the industrial side. Now let's talk about what's happening on the investment side, because this is where the story gets even more compelling. Central banks around the world are accumulating precious metals at a pace we haven't seen in generations. Now, most people focus on gold when they talk about central bank buying. And yes, central banks have been buying gold at record levels. But here's what's flying under the radar. The same concerns that are driving central banks to buy gold are also driving sophisticated investors to silver. Why? Because silver gives you everything gold gives you in terms of monetary properties, but with a much smaller market and much more upside potential. The entire above-ground silver market is a fraction of the size of the gold market. When capital starts flowing into silver for monetary reasons, the price impact is exponentially larger. And we're starting to see that flow happen. Physical investment in silver has been surging. Mints around the world are reporting record sales of silver coins and bars. Premiums on physical silver have been elevated for months, which tells you that demand is outstripping supply at the retail level. But it's not just retail investors. Institutional money is starting to pay attention. Silver ETFs have seen significant inflows. Now, ETF flows can be volatile, and they can reverse. But when you combine ETF buying with the structural industrial demand and the supply deficit, you're looking at a perfect storm of factors, all pointing in the same direction. Let me tell you about something that most people don't understand about the silver market. It's something called the paper market. On exchanges like the COMEX, there's far more silver traded on paper than actually exists in physical form. Banks and traders use silver futures and options to speculate on price movements without ever touching actual metal. And for years, this paper market has been used to suppress silver prices and create artificial supply. But here's the problem with paper markets. They work great until they don't. And when physical demand overwhelms the paper supply, things can get very interesting very quickly. We saw a preview of this a few years ago when retail investors coordinated to squeeze silver shorts. The price spiked dramatically in a very short period of time. Now imagine what happens when it's not just retail investors, but industrial users, institutional investors, and potentially even governments all competing for physical metal at the same time. The mechanics of a short squeeze in silver are particularly brutal because of how the market is structured. Large banks hold massive short positions in silver futures. They're essentially betting that silver prices will stay low. But if prices start rising rapidly, those banks are forced to cover their shorts by buying silver, which pushes prices even higher, which forces more covering, which creates a feedback loop that can send prices parabolic. And here's why this matters to you right now. We're at a point where all of these factors are converging at the same time. The supply deficit is getting worse, not better. Industrial demand is accelerating from multiple sectors simultaneously. Investment demand is picking up as more people wake up to what's happening. And the paper market is becoming increasingly unstable as the gap between paper claims and physical metal widens. Some analysts are now projecting that silver could reach $100 per ounce. Now, I'm not going to sit here and promise you that silver is going to a specific price by a specific date. Nobody can do that honestly. But what I can tell you is that the fundamental case for significantly higher silver prices is stronger than it's been in decades. Think about the math for a second. Silver recently hit $64 per ounce, which was a record high. But even at that price, silver is still historically cheap relative to gold. The gold-to-silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold, has been extremely elevated for years. Historically, that ratio has averaged somewhere around 50 to 1. Recently, it's been closer to 80 or 90 to 1. That means silver is undervalued relative to gold by almost any historical measure. Now, if you're sitting there thinking about your financial future, about your retirement, about protecting the wealth you've worked your entire life to build, this is where you need to pay attention. Because what we're talking about here isn't just an investment opportunity. It's a wealth preservation strategy in a world where traditional assets are becoming increasingly risky. Let me take a quick aside here because this is important. If you have $100,000 or more in retirement accounts, you need to understand how gold IRAs work. I've put together a comprehensive guide that explains exactly how you can get physical precious metals into your retirement account without triggering tax penalties. It covers everything you need to know about the process, the rules, the benefits, and the potential pitfalls to avoid. You'll find that guide in the description below. It's completely free, and if you're serious about protecting your retirement wealth, it's worth taking a few minutes to check out. All right, back to what's happening in the silver market and why this matters so much right now. Let's talk about what happened in the past when silver markets got tight. Because history doesn't repeat, but it often rhymes, and the parallels to previous silver bull markets are striking. Go back to 1979 and 1980. Silver went from around $5 per ounce to over $50 in a matter of months. Now, that was driven by the Hunt brothers trying to corner the market, which is a different situation than what we have today. But the underlying dynamic was the same. Physical demand overwhelmed available supply, and the price went parabolic. People who owned silver before that move made life-changing returns. People who waited until the mainstream media was talking about it bought at the top and got crushed. Then, look at 2011. Silver went from around $15 to nearly $50 in less than a year. That move was driven by concerns about the financial system after the 2008 crisis, massive money printing by central banks, and a surge in investment demand. Again, the people who positioned themselves early made extraordinary returns. The people who chased it at the top got hurt. Now, I'm not saying we're going to see a repeat of those exact moves, but I am saying that the setup we have right now shares many of the same characteristics: tight physical supply, growing industrial demand, increasing investment interest, and a macro environment that's increasingly favorable for hard assets. Speaking of the macro environment, let's talk about what's happening in the broader financial system, because this is the context that makes the silver story even more compelling. We're living through the largest monetary experiment in human history. Central banks around the world have printed trillions of dollars, euros, yen, and yuan over the past 15 years. That money didn't disappear. It's sitting in the financial system, inflating asset prices and eroding the purchasing power of currencies. And despite all the talk about fighting inflation and raising interest rates, the fundamental trajectory hasn't changed. Governments are still running massive deficits. Central banks are still the buyers of last resort for government debt. The money printing might slow down temporarily, but it never really stops. And people are starting to wake up to this. They're realizing that holding cash, holding bonds, holding traditional financial assets might not be the safe strategy they thought it was. They're looking for alternatives. They're looking for assets that can't be printed, that can't be devalued by government policy, that have intrinsic value based on their physical properties and their utility. Gold has always been the traditional answer to that search. But silver? Silver gives you all of those monetary properties plus the industrial demand story. It's both a monetary metal and an industrial metal. And that dual nature makes it uniquely positioned for what's coming. Now let's talk about something that most people aren't paying attention to but should be: the geopolitical dimension of the silver market. Because what's happening isn't just about supply and demand in a vacuum. It's about a fundamental restructuring of the global economic order. Countries around the world are actively working to reduce their dependence on the US dollar. The BRICS nations, Brazil, Russia, India, China, and South Africa, have been discussing creating alternative payment systems and potentially backing their currencies with commodities, including precious metals. Now, whether that actually happens or not is debatable, but the fact that these conversations are happening at the highest levels of government tells you something important. The world is changing. The dollar's dominance isn't guaranteed forever, and when countries start looking for alternatives, precious metals become increasingly important. China has been particularly aggressive in accumulating commodities, including silver. They understand that in a world where currency values are uncertain, physical assets with real utility have enduring value, and they're positioning themselves accordingly. When you see the world's second-largest economy systematically accumulating a commodity, you should probably pay attention. But here's what really keeps me up at night, and what should concern anyone who's paying attention to these markets. The disconnect between the paper market and the physical market is getting wider. There are more claims on silver than there is actual silver to back those claims. It's a bit like the banking system before a bank run. As long as everyone believes the system works and nobody asks for their money all at once, everything is fine. But the moment confidence cracks, the moment people start demanding physical delivery instead of paper promises, the whole structure can collapse very quickly. And we're seeing signs that confidence is starting to crack. Premiums on physical silver have been elevated for an extended period. Delivery times from mints and dealers have been stretched. There have been reports of tightness in the wholesale market. These are all warning signs that the physical market is under stress. Now, imagine what happens if we get a real crisis, a financial crisis, a geopolitical crisis, a currency crisis. Suddenly, everyone wants physical assets. Everyone wants to convert their paper claims into actual metal, and there simply isn't enough to go around. The price would have to rise dramatically to ration the available supply. And in that scenario, the people who already own physical silver would be sitting on an asset that's suddenly worth multiples of what they paid for it. This is why timing matters. This is why waiting until everyone else figures it out is a mistake. Because by the time the mainstream media is running stories about silver shortages and soaring prices, the opportunity to buy at reasonable prices will be gone. You'll be competing with millions of other people who all suddenly want the same thing at the same time. Let me share something with you that I think really illustrates the opportunity here. The total value of all the silver ever mined and still in existence above ground is estimated to be somewhere around $1 trillion. That sounds like a lot until you compare it to other markets. The total value of all gold is around $12 trillion. The total value of global real estate is hundreds of trillions. The total value of global stock markets is over 100 trillion. The total value of global debt is well over 300 trillion. Silver is a tiny market compared to almost any other asset class, which means that even a small percentage of capital flowing from those larger markets into silver would have an enormous impact on price. If just 1% of global stock market wealth decided to allocate to silver, we're talking about over $1 trillion trying to flow into a market that's currently valued at around $1 trillion. The price impact would be staggering. And here's the thing. That kind of flow doesn't seem far-fetched when you look at the trends. Younger investors are increasingly interested in alternative assets. They've seen traditional markets manipulated by central banks. They've seen their purchasing power eroded by inflation. They're looking for assets that are outside the traditional financial system. Silver fits that profile perfectly. Institutional investors are also starting to pay attention. Hedge funds, family offices, pension funds, they're all looking at commodities as a way to diversify away from overvalued stocks and bonds. And within commodities, silver stands out because of its unique combination of monetary properties and industrial demand. But let's bring this back to you and your situation. Because ultimately this isn't about abstract market dynamics or geopolitical trends. It's about protecting your wealth and potentially growing it significantly in the process. If you're someone who's worked hard, saved diligently, and built up a nest egg for retirement, you need to ask yourself a serious question. Is your wealth actually safe in the assets you currently hold? Are your stocks going to maintain their value if we see another financial crisis? Are your bonds going to protect you if inflation comes roaring back? Is your cash going to preserve its purchasing power as governments continue to print money? Or do you need to diversify into assets that have held value for thousands of years, that can't be printed or devalued by government policy, that have real utility and real demand in the physical world? Silver gives you that diversification. It gives you exposure to an asset that's both a store of value and an industrial commodity. It gives you a position in a market that's structurally undersupplied and facing accelerating demand from multiple sources. And it gives you the potential for significant appreciation if even a fraction of what I've outlined here plays out. Now, I'm not saying you should put all your money into silver. That would be foolish. Diversification is important, but I am saying that having zero exposure to silver at this point in the cycle, given everything we know about the supply-demand dynamics and the macro environment, is a risk in itself. Think about the asymmetry of the opportunity. If I'm wrong and silver just trades sideways or goes down, you lose some money on that portion of your portfolio. But if I'm right, and we're at the beginning of a major bull market in silver driven by structural factors that aren't going away, the upside could be multiples of your initial investment. That's the kind of risk-reward profile that smart investors look for. And here's something else to consider. Silver is still accessible to regular people. You don't need to be wealthy to own silver. You can buy silver coins and bars in relatively small denominations. You can start with a few $100s and build a position over time. Compare that to real estate, where you need tens or hundreds of thousands of dollars to get started, or to many other alternative investments that are only available to accredited investors with significant wealth. Silver is democratic. Anyone can participate. But that window won't stay open forever. As prices rise, as more people catch on, as the supply situation gets tighter, it becomes harder and more expensive to build a meaningful position. So what should you do? First, educate yourself. Don't just take my word for it. Do your own research. Look at the supply and demand data. Study the historical price movements. Understand the industrial applications and why they're growing. Read what analysts and experts are saying about the market. Form your own opinion based on facts and logic, not emotion or hype. Second, if you decide that silver makes sense for your situation, start building a position. Don't try to time the perfect entry point. Don't wait for a pullback that might never come. Dollar cost average if that makes you more comfortable. Buy a little bit regularly over time. Build your position methodically. Third, focus on physical silver. Coins, bars, things you can hold in your hand. Yes, there are paper alternatives like ETFs and mining stocks, and those have their place. But the real protection, the real insurance against financial system instability, comes from owning physical metal that you control. Fourth, store it securely. Whether that's a safe at home, a safe deposit box, or a professional storage facility, make sure your silver is protected. And make sure you have a plan for accessing it if you need to. And fifth, be patient. Bull markets in precious metals don't move in a straight line. There will be volatility. There will be pullbacks. There will be times when you question whether you made the right decision. But if the fundamental thesis is sound, if the supply-demand dynamics are real, if the macro environment continues to favor hard assets, then short-term price movements are just noise. Let me leave you with this final thought. We're living through a period of extraordinary change. The financial system that's existed for the past 50 years is under stress. The dollar's role as the global reserve currency is being questioned. Governments are drowning in debt. Central banks are trapped between fighting inflation and supporting asset prices. Technology is disrupting traditional industries and creating new sources of demand for commodities like silver. In times of change, in times of uncertainty, in times when the old rules don't seem to apply anymore, people look for anchors. They look for assets that have enduring value regardless of what happens in the financial system or the political system. For thousands of years, precious metals have served that role, and there's no reason to think that's going to change now. Silver, with its unique combination of monetary properties and industrial utility, with its structural supply deficit and accelerating demand, with its relatively small market size and enormous upside potential, represents one of the most compelling opportunities available to investors today. The question isn't whether silver is going higher. The question is whether you're going to position yourself before the move happens or after, whether you're going to be one of the people who saw it coming and acted, or one of the people who wished they had. This is your warning. This is your opportunity. What you do with it is up to you. But don't say you weren't told. Because when silver is trading at $100 or $150 or $200 per ounce, and everyone is talking about how obvious it was in hindsight, remember this moment. Remember that you had the information, you had the opportunity, and you had the choice. Make it count.